What's going on, guys? So this is the kind of stuff that I'm talking about, right? CNBC. Stock futures fall slightly to start August trading, with market coming off best month since 2020. All of these headlines, it's like, I get it, right? It's all about, the headlines, what's clickable, what's not. But, from an active full-time day trader here, no real day trader, whether you're at the highest level, the professional level, or you're at the retail level, is paying attention to this nonsense, right? Who pays attention to this nonsense is all of like the Twitter traders, the Wall Street Bets Reddit traders, the guy down the street, your Uber driver who trades a little bit of Tesla options in between shifts. Like, those people kind of read these headlines, and they kind of run with it, right? And then when they run with it, they start telling other traders, hey, futures are going to be down, this is the best month, nothing has changed, if you have calls, you're going to be underwater. And it's like, come on, it's like, if you understand technical analysis, it doesn't really matter what any of these headlines do. It doesn't matter how much the Fed increases interest rates. It doesn't matter what inflation is. We can make money to the long side as well as to the short side. If you have a technical setup, a game plan, a system, you're disciplined, you treat this business with a level of respect. And that's the thing, the whole 2020 COVID wave, really brought in a lot of people that did not deserve to make money. And I'll be the first to say it. So many traders did not deserve to make money during 2020. So many people with stimulus checks or on financial aid, or just taking, a bunch of YOLO money because, maybe their company put them to work from home. So they're looking at different ways to add money. If you made money during that time, I congratulate you. I hope you did something smart with it, saved it, reinvested it, paid some bills off, did something stupid, and didn't do something stupid with it. But let's just read a little bit of what CNBC has to say. So stock futures fell slightly following the market's best month since 2020 as investors look ahead to another week of key earnings reports and economic data. The Dow Jones futures fell by 67 points, or 0.2. S&P futures shed around 0.2, and the NASDAQ by 0.3. This is all minuscule, guys. Very, very minuscule. On Friday, all major indexes gained, posting winning weeks and capping off the best month of the year. So if we kind of look at the Dow gained 6.5%, the S&P added 9.1, the NASDAQ rose 12.4, right? NASDAQ at one point in time was 31, 32, 33% down. So, we're just slightly out of bear market territory, that 20%, a little bit over that. As investors rushed into tech stocks beaten up the most during this bear market, okay? We are seeing a relief rally in the stock market. Blah 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 blah. As longer term interest rates have been coming back down, said Chris Zaccarelli, chief investment officer for Independent Advisor. Blah 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 blah. So, what I'm trying to say, guys, is, if you really kind of look at where we're coming off of the bottom, you look at where we stand right now, could we get into a little bit of, distribution, right? Now, if you're a newer trader, you may not understand what distribution is, but distribution is just a period in time where stocks start to consolidate. The ranges contract. So maybe we don't have on Tesla the 30 to 50 point intraday moves that we have. Maybe it's not 30 to 50 points. Maybe it's something like 15 to 25, right? You got a stock like Apple that's moving $2, $3, $4. Maybe it's 50 cents to $1.50, right? Ranges contract. A lot of stocks start to rest before they either make their move higher or we do get a big breakdown, right? Now, I can look at this tape, right? And I can look at this right now and I can say two things. I have a case for the bulls. I have a case for the bears from a technical level. So if I just kind of go back here 4 months, right? And I look at the chart going back all the way to March here. We've got this high here, 15,266 on the NASDAQ 100. We have one big leg down followed by a relief rally bounce, okay? So if we look at this, one leg down followed by a relief rally bounce, which was rejected, and we have our second leg down, right? Okay, here's the case for the bears. You got one big leg down, you got a relief rally, you got the next leg down, you got a second relief rally here. We could chop around sideways here, start to break down over the next couple of weeks, and then boom, put in another third leg down going into the end of the year, right? That's the case for the bears. The case for the bulls is that, hey, you know what? This is not the second leg down. If we zoom out and we kind of look at more data, right, going all the way back to the beginning of the year, or actually, the end of 2021 when this kind of really started, If we go back to November and December and we look at this big leg down, right, followed by the first bounce that was rejected, followed by the second leg down, here's your second relief rally, and here's our third leg down, and here's our rally back up to this supply zone. What this is telling me is normally bear markets work in cycles of 3. There's 3 legs. Now, don't get me wrong. Don't write this in stone. Could we get a 4th leg down? It's entirely possible. But normally, it's 2 to 3 legs down. The 3rd leg normally being that last leg washout. Now, if we kind of make a point here, if we do say that case, this is going back to, March, April. This downturn that we had by this rally here, by this low here of 11,000, and this rally here looks like a bear flag. Okay, this looks like it could push a little bit higher into the 13,174 range, but it also looks like it's forming a bear flag that if breaks down below the 50-day moving average again on the daily time frame. So if we lose the 50-day moving average on the Nasdaq 100's daily time frame, we will get the another leg down. Okay, we will get in a new low below 11,000. That's the only thing for a short-term trader you're looking at. All you're looking at is, do we lose this 50-day moving average yet again? And if we do, then I know I'm telling myself I'm 100% short biased. My pedal is to the metal. I am looking to short the rips and fade the dips. Okay, now if we do start cracking above the 13,000 and 13.4 in this area here, and we can get over this 13.5, that all changes. The bulls already have the benefit of the doubt. The bulls are already in control for the short term, reclaiming that 50-day moving average and building over it now for going on 2 to 3 weeks. The bulls are doing a fantastic job. If the bulls get back over 1,400, this bear market is over. Okay, this bear market is over the 200-day moving average. I don't care what anyone is going to tell you. The short-term bear market, not saying that we can't go into some sort of bear market in 2023 or in 2024 or 2025, but what I'm saying is this 2022 bear market is over if we get back over 14,000. Guys, I hope that helps. Again, eliminate a lot of the noise, eliminated a lot of the news. If you guys are looking at the interest rate hikes and the Fed and inflation and the earnings reports and all this other stuff, and you're not looking at the technicals, you're just so focused on the headlines, you are going to lose money. You are going to drive yourself crazy. Just worry about the technicals. Guys, if I never turned on a news channel or went to CNBC at all, I would know where the stock market can and can't go just solely based looking on technicals. That's what I want everyone to understand. You don't need all that outside noise. What's going on? Who is the judge? The jury and the executioner is price action. Are stocks overvalued? No. Are stocks oversold? No. You want to know what the fair value of a stock is? What someone is willing to buy and sell it for. If someone is willing to buy Tesla at $1,200 or $1,250 or whatever it was, if someone was willing to buy GameStop at $500 or whatever it was, that's what the stock is worth at that moment in time. That's all that matters. It doesn't matter if it's overvalued. It doesn't matter anything else. What matters is what someone's willing to pay for the price of the stock. I hope that kind of makes sense, guys. If you guys like this kind of stuff, you want more technical analysis, you guys want to learn how to day trade for reals and not just play, day trader. There's a lot of people out there just playing day trader, right? Looking at the charts every day, spewing nonsense on Twitter, spewing nonsense on Reddit. There's a lot of pretenders. There's a lot of people who are playing day trader, right? Throwing out, weird, projections, weird, calling the top, calling the bottom type of stuff. Guys, slow down and relax, right? You don't need to play day trader. If you want to push your chips to the middle of the table, let's do this for real. Visit my website at evolutiontraders.com, and I'll catch you guys all in the next one.